Hi, my name's Roger Schluter. This video is actually on bank loans, and it's really the first of a five-part video set on financing your business. The five parts are going to be bank financing, personal ways of financing, other financing, crowdfunding and peer-to-peer financing, and then other equity and incubator financing. How to finance your business with regular bank loans. This video will show the different types of loans from banks and really just information about that. So anyway, bank loans carry their own advantages and disadvantages. And there's really three advantages, and there's also three disadvantages to receiving a loan from a bank. The advantages, the number one, is that the interest rate will generally be lower than credit cards or alternative types of financing. Banks usually price their interest rates off the prime rate or the 10-year treasury rate. These rates are more predictable. Even if the interest rate is variable, they're still more predictable. And being variable is that it moves with a benchmark, move up and down with the benchmark. A lot of the benchmarks are either the prime rate or the 10-year treasury rate. This is the reason most bank loans have an interest rate that is really consistent and similar to other banks. Now there can be differences, but usually not more than like a quarter of a point. The number two advantage is that bank loans can help your business to grow and get larger over time in a quicker time frame than saving up the money from cash flow of the company. Banks are usually expecting the loan to enable your company to increase sales and increase your profit. Number three advantage would be the bank loan allows your company to remain in control. The bank is not going to try to tell you what to do as long as you make your loan payments on time. The only downside to this is when the bank has a secured loan with collateral securing your loan. So again, if you make your payments on time, there's really no reason that the bank would be able to acquire your collateral unless you do not follow the rules of the loan note and security agreement. Now disadvantages. There's really three disadvantages to having a bank loan. Most banks have a very long application process that may be up to 5 or 10 pages long. This application may need the help of an accountant or attorney to fill it out properly. The bank will have some sort of approval process that may take days or weeks before you actually get the money. So that's that's kind of typical for most banks. Banks also have specific eligibility criteria for the loan. The bank usually does not tell you about this criteria really until you do not qualify, and that will be a reason to decline the loan. The eligibility could be that you have to be in business for a length of time, like 2 years. The business usually must also be profitable, and that's even that most businesses do not make money until the second or third year of operation. But and that might be another one that your business may have to be profitable. Number three, the loan must be secured by company, or the loan may be secured by company real estate or machinery. And if you miss any payments, the secured collateral may be in jeopardy. Sometimes banks take personal collateral like your residence, which could also be in jeopardy of forfeiture if you did not pay the loan on time. The main types of bank loans are probably the number one would be a term loan or installment loan. The term loan would be for a specific term, usually 5 or 10 years, and the loan would usually be for a specific asset like a vehicle or equipment or machinery. The interest rate could be fixed or variable or a combination of the two. Another type of loan is the line of credit. This loan is for a specified amount of money that can be drawn down as the borrower prefers. The bank likes it if the borrower increases and decreases the balance on this loan. These loans will almost always have a variable interest rate that will go up and down with prime. These loans are usually made for 1 year and can be renewed on an annual basis. Banks like that renewal on an annual basis so they can turn it off if they have to. The bank cannot turn the loan off, like I said, unless when the renewal time comes. These loans usually have a collateral basis, which can be inventory, accounts receivable, or almost any other asset that can be sold if you do not pay in a timely manner. Another one, the third one, would be working capital, a working capital loan. Working capital loan can be used for any company or corporate use, and the line of credit is really a form of the working capital. These are harder to get because businesses can use them for anything they want, any reason it wishes. Many times a working capital component is better if it's put into a bank or SBA loan, and then as such usually considered to be safer loan than if it is if it's borrowed with other funds. Number 4, SBA loans from the Small Business Administration. SBA loans are made by banks and usually are made as a guarantee of the bank's loan. The SBA has several types of loans, and it is capable of making any type of business loan. They are all made by or in connection with banks. So the bank will be calling the shots usually. Most SBA, the only exception to this would be a SBA disaster loan that are usually made by SBA, don't need a bank. They're just made directly through SBA. Number 5 would really be most banks, the larger banks, will have bank credit cards. These will usually have a larger line of credit than personal credit cards and have a larger or a higher interest rate than your regular bank loan. Many banks have a lower bar or lower requirements on receiving the business credit card than they do on a regular business loan. Banks have been known to be very slow in getting a business the money, even after they've been approved for their loan. The bank application can also be complicated and lengthy. If you are turned down for a bank loan, look at the remaining videos, and I think you'll find your money in one of them. And after they have all been released, they'll basically be put together in a playlist for small business looking for financing. Please subscribe to this channel if you like this type of content, and hit the bell to be notified of future videos. If you learned anything, I hope you hit the like button. This does help YouTube to expand this video's presence to other people. Anyway, my name is Roger Schlueter, and I will see you in the next video. Thank you.